Asian markets are in a tailspin this morning. Stocks plunged across the region after US President Donald Trump's sweeping tariffs came into force. Japan's Nikkei dropped nearly 5% while the yen surged against the dollar. In Taiwan, stocks fell almost 6%, even as the government launched a $15 billion rescue fund. Hong Kong's Hang Seng opened more than 3% lower. Shanghai and Seoul also saw sharp declines. The panic follows Trump's move to impose up to 104% tariffs on Chinese goods, escalating a potential global trade war. The White House first added a 34% tariff after China hit back. Trump raised duties by another 50%. Markets had briefly rebounded this week, hoping for talks, but that hope has now faded. On Wall Street, the S&P 500 closed below 5,000 for the first time in nearly a year. Oil has also dipped below $60 a barrel, and in Europe, the EU is preparing countermeasures, possibly within days. Well, joining us to discuss the stock market's reaction to this tariff action is Akshita Thomas, an associate producer with NewsX World. Akshita, thank you very much for joining us. What more can you tell us about these global markets in the sort of aftermath since this announcement and now implementation of these sweeping tariffs from Donald Trump?
Yes, Joshua. So after Trump's explosive tariffs on the 60 countries which he has deemed as the worst offenders have taken place, major Asian markets have taken a big hit because of this. Let's take a look into how the markets have been affected, the major markets. If we take a look at Taiwan's stock index, it has closed at a 5.8%. Moving on, if we see Nikkei, Nikkei has now reached, it had initially, at the initial moments of trade, it was at a 4.86%, which has now come to a 3.01. It's now come to a 3.64%. Moving on, if we check out Hong Kong stock, Hang Seng index is now, it had plunged to over 3%, but now if you can see, it's at a 0.88%. So if we move on to Shanghai Composite, it had shed at a 1.13, which is now at a 1.17, and right now we can check Shanghai Composite is at a 1.10%. If we take a look at the US markets, which the US hit effectively at a multi-year low, the US markets have not been hit as bad as the Asian markets, but are still in recovery nonetheless. Dow Jones 84%. If we check S&P, it's now at a 1.57%. It has for the first time closed at below the 5,000 point mark. And if we check up NASDAQ, it's much worse, 1.5%. So right now the Asian and US markets, and just an additional point, our risk has to 25 points, which is an estimate of 6%. Affects the Indians hoping to get a home loan. And this is where we stand with the US and Asia, and we are yet to see how the markets, in fact, further might steep explosive tariffs. Thank you, Joshua.
Yes, thank you. Actually, graphs going in a similar direction, and that would, well, joining us to discuss the aftermath of the sweep, Jayjat Bhattacharya, president of the CDEPR, who is joining us from New Delhi. Dr. Bhattacharya, thank you very much for being here. We've spoken already this morning and their implementation, but I want to focus now on China, hit with 104% tariffs. Countries like as well, vital of goods, companies like Apple, H&M, Nike. How do you consumer will be affected coming overnight?
It's a no-brainer. Consumers will have to pay that much more, because who pays for the tariffs? The one who's going to absorb the tariff will be the...
We seem to be struggling there with the line from Dr. Jajat Bhattacharya, so I will dive into some more information that we have. Apple making the majority of its hardware in China, prices expected to rise. Manufacturers of clothing like H&M see most of their clothing made in China and Bangladesh. That may see a serious increase in costs of clothes that are going into the global markets. I mentioned Nike earlier. Adidas also produce around 39% in Vietnam, while other companies like Samsung as well producing their goods in Vietnam. The global impact of these tariffs, not just on business but also on consumers, is set to bring rising costs across the board. We, of course, will be here to cover all of those price rises and the impacts on the global markets as they happen. We move on.